Today I'm going to show you guys an extremely profitable ICT strategy that involves using the higher time frame in confluence with the lower time frame. So for example, rule number one is we need to identify a daily fair value gap. And what that's going to look like is we're going to have an impulsive move to the upside on the daily. This is going to create a daily fair value gap, which is our POI, which means our point of interest. And what we're simply looking for is a pullback on the hourly, on the smaller time frame, into this POI. Then we're looking for a market structure shift out of this POI. Then we're looking for a pullback and then a continuation to the upside with the higher time frame momentum. So our lower time frame will then be lining up with our higher time frame. In terms of an invalidation, number three, we're simply going to have an invalidation below the liquidity sweep, so below right here, below the market structure shift, and then we're going to look to target around a 1 to 2 risk to reward. And this question mark right here, number four, is simply that is up to yourself. Okay, this strategy works very, very well with taking targets off at around a 1 to 2 risk to reward. However, it's up to yourself and your own back testing whether you may want to scale out positions, you may want to leave a runner. That is really up to yourself, and that is really the beauty of trading, because there's many ways to actually trade these markets. So this is what we're looking for on a long example, and then vice versa for a short. We're going to have an impulsive move to the downside on the daily. Then we're going to be left with a daily fair value gap within this impulsive leg. And then on the smaller time frame, so on the hourly, we're looking for a pullback into our daily fair value gap. On the hourly, we're looking for a market structure shift to the downside, followed by a correction, and then we can look to short that back to the downside. Because out of this point of interest, that's what gives us the really high probability of this trade playing out. So what we have here is a high, a higher low, followed by a higher high. Then we get a strong market structure shift to the downside right here. Then we're looking for a pullback and a potential short trade to the downside to go with the higher time frame momentum. So this right here is exactly what we're looking for if we're looking to short this market to the downside. Okay, so step number one is to identify our daily fair value gap. So what you can see right here, this is on GBP USD on the daily time frame. We've created a daily fair value gap right here, which is a 3-candle pattern, indicating that momentum is strongly to the downside. So what we're simply looking for on the hourly is a pullback into this daily fair value gap, then a market structure shift, a retrace, and then we can look to short that back to the downside. So let's drop down to the hourly so we can have a look at what's going on the lower time frame. So you can see right here, this is the hourly. We're looking for a pullback into our POI. So we are currently into our POI right here, our point of interest. And okay, so what we have here is clear bullish market structure indicated by this high right here, higher low, higher high. So what we're simply looking for is a shift in market structure. So we're looking for a close below this right here, and then we can look to short this to the downside on a retest of this level. And then we're looking for a invalidation just above the liquidity sweep, just above the high of the invalidation, and then we're looking to target a 1 to 2 risk to reward. So let's see if we are triggered in. We're triggered in right here, and now we are entered into the trade. So you can see prices sort of messing around a little bit, and then we start to melt to the downside. So this is what I was saying about step number 4, where it really is up to yourself. Okay, you may look to take 80% off the table at a 1 to 2 and then allow a runner to run. Okay, but you know, taking profits and banking profits at a 1 to 2 is quite sensible, but you can see this trade's ultimately running lower and is currently at around a 1 to 3.5. Okay, so this is a sell example using the model within this video. Okay, so now let's look at a long example. This is on GBP USD. This is on the daily time frame currently. So what you can see here is we've created a daily fair value gap to the upside right here. This is the 3-candle pattern indicating that bullish momentum is to the upside. You can also see we've sort of broke market structure on the daily, indicated by this strong body close above this previous high right here. So clearly momentum is to the upside on this market, and therefore you should only be looking for longs on this market to go with the trend. So now let's drop down to the hourly. We're looking for a pullback into our POI. So you can see that's what we get right here. So in terms of a entry, what you can see is we get a body close below right here. So in terms of market structure, this is sort of bearish market structure coming down. So we've got a lower low, lower high, lower low, lower high, followed by a lower low. So we're looking for a break above this most recent lower high right here, a break and close above, which is what we get right there. So entries on the retest of that level, invalidation below this liquidity sweep right here, and then we're just looking to target a 1 to 2, and then you can leave a runner as well. So you triggered in right here. So you can see a 1 to 2 was hit, and we did actually get quite a reaction from that sort of take profit area, which is normally a good sign that this area is actually quite a good level to be taking profits off at. Okay, and then ultimately you can see that there was some further continuation to the upside on the hourly, and price did end up running this external range liquidity. You see, all we're really doing is trading from internal range liquidity up until external range liquidity, which is up at this high right here. So like right up at this high is our external range liquidity. So this would be a sensible place to be taking off all of your profits if you did have any runners running from this low right here. So this is going to be the final take profit right here. Okay, so this is the daily perspective on GBP USD. What you can see here is we've created this daily fair value gap to the downside, indicating that bearish momentum is in control of this market. So we're looking for a pullback into this POI. So let's drop down to the hourly so we can understand what's going on a lower time frame perspective. So this is the hourly right here coming into the POI. And what you can see here is in terms of market structure, we've got a high followed by a higher low, followed by a higher high within the market. So clearly this is bullish market structure. So what we're simply looking for is a shift in this market structure, break of structure, retest, and then we can look to take that short to the downside. It's really important to note that we want to see a break and close below, so a body close below the most recent higher low. So this is a strong confirmation. That's what we get right here on the hourly. So we're looking to enter on the retest of that level with invalidation above the liquidity sweep, and then we're just looking to target a 1 to 2 risk to reward. So invalidation right there, target a 1 to 2. So we're triggered in right here, and you can see price starts pushing to the downside and actually takes us out for a 1 to 2 risk to reward. So this is a great sell example right here. And one thing maybe to note as well is you can often get more than one confirmation out of one POI. So just because we've took this one short trade right here, you know, if price comes back up and manipulates this liquidity that's resting above these highs right here, we can look for a potential another short trade to the downside. So in terms of market structure right here, this is the most recent higher low right here. So we need to see that taken out, a body close below there, and then we can actually look for another short trade to the downside. So we get a break and close below right here, entries on the retest, invalidation above the liquidity sweep, and then we're looking to target a 1 to 2 risk to reward. So you can see price starts to cascade to the downside, and you would have been took out there for another 1 to 2 risk to reward. So, you know, the point of this right here is just because you've took a first entry within here, if price does decide to come further up into the POI, into a further discount, you can still look for another entry as long as your rules and everything lines up, just like right here, and then you can take another trade with invalidation and take profit right there. So another great couple sell examples. If you haven't already, make sure to join the free Discord. The link is in the description down below for free analysis and to stay ahead of the curve with upcoming YouTube videos. Make sure to join. The link is in the description down below, and I will see you on the inside. If you have any queries, drop them down below this video as well, and I will get back to all of you guys. I hope you did enjoy this one, and I will see you in the next video. Take care, guys. Bye-bye.